Okay, for those who are absent, I think they will be able to watch this lesson in recorded version. So we are talking today about the break of the structure strategy. That's really good strategy that I'm loving it. I'm getting into it at least for about the last 1 week, and I'm getting more and more excited about this. So let's start with the very beginning. I will show you the examples of such trades. This screenshot reflects the plot of the strategy. We have the uptrend structure. For example, we have an in-play instrument, let's say Jasmy, with very good daily volumes. The instrument is being pumped, is being accelerated, and so on. And after some time, we see that the huge fixation starts, the structure change, and there is a kind of correction. So we see that during the correction, the maximums are decreasing. The first maximum, the second maximum, and so on. Like this, like a kind of downward trend, the downtrend. And finally, we watch the point where we break the structure, where we overlap the previous high. There was the previous high, the next high is lower than the previous ones, but the structure is broken when the next movement cover the previous high and break the structure. In this case, the situation changes because what the plot, all the people, all the retails who were shorting from this, they are placing their stop losses where? They are placing their stop losses somewhere here, 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 and so on. And we are hitting all these stop losses. What else? We see here the chance to make the upside movement again, because there are a lot of liquidity placed by those people who are shorting these movements, who try to short the pumped instrument. Finally, we are expecting the retest to the closest level here, for example, and there will be our entry point towards the continuation of this movement. So we expecting a kind of picture where we have one touch, second touch. We already know that after second touch we have here a lot of liquidity. So we are waiting for our entry point, and on the next touch, on the third touch, there will be the breakout. So I will show you on the other examples. For here you see from structure, and I of course I forgot to cover one topic that in these cases, in all these kind of setups, we can we can enter the market from two angles, from two different kinds of setups. For example, the first one will be from structure, the second from the break of the structure. From the structure, it means that we have all the same principles: really good volume, really good growth potential, and then we have the maximums are lowering, lowering, and lowering. And then we have, in fact, we see that the whole structure implies that here we have too many touches, much more touches than we have on the deep, on this edge of structure, and we can take a risk to just stand from here. For example, there was a first touch, to forming a level. There was the second touch forming a level. This is our entry point. Yanni, could you turn off your microphone, the kind of noise?
It's Harold.
Harold, hi. Could you please turn off your microphone for a moment? This is our entry point from where we can expect the movement to break this structure, because there are too many touches and the price always approach the edge to where we have much more touches, because here the more liquidity concentrated. This is the example of the entry from structure. Previously, I showed you the example of entry from break of structure. In fact, there are two approaches to absolutely similar strategy. Let's watch next. I will show you more examples. There was the entry from structure, as you see, because the movement was really confident. We formed some levels, some cascade levels, the first level, the second level, and so on. Then we just broke the structure here, created a new structure inside this consolidation, and here, from here, we just entered the position. There was the potential of 3%, but in fact we could make much more. The next, again, the break of structure, because what do we see here? We see really confident growth. Then we see the correction, one touch to the level, the second touch, we see cascades level, and then we see small, very small local extremums. Then we break these extremums, and what do we see next? The next stage of forming of this setup is that we break this structure, a kind of inclined level, as you see, because here there was the first extremum, then the second extremum, then we break these extremums, as you see. We get back to the retest zone, and on the retest zone there will be our entry point with this potential. Of course, ideally, on this moment there should be the second touch formed here, and of course we see that when we have two touches, it means that more liquidity we have here, and more applicable the strategy could be to break this structure. So the risk is very clear. The risk is to place a stop loss behind this retest zone, and the potential is always at least 3 to 1, 4 to 1, or even higher. Finally, what do we have? We have this structure to realize, to come into reality, and entry point, the potential, the stop loss, and what do we see by the end? Where this trade was hidden, can't find it. Okay, never mind. Maybe I will show you as soon as I find it. There was about the break of structure, the entry from the structure, is shown here. The idea is absolutely the same. We are searching for the instrument with the very high volumes. I will show you the screener that will assist you in searching for such setups. We see the really good aims, really good targets, first touch, second touch, and along this structure, where do we have more liquidity? Here or here? Of course here, because this kind of target, this kind of multiple touches level looks much more attractive than this one, because here we have only one touch, and when the price comes to this level, we can try to open a trade from, for example, the second touch here, and expecting the uptrend movement to break this structure. So this is entry from structure. The entry from break of structure is when we break the level, have a retest, and the mechanics is absolutely the same. So maybe do you have questions on such stage, on this stage? Everything is clear or not?
I want to ask you
Mm-hmm.
about people USDT.
People USDT, the current situation.
Yeah. I mean,
I think it's too late now, but the entry point was really good from structure, not from break of structure, but from structure. Why? Because here on 15 minutes, for example, we see the clear picture, one touch, the second touch, and here we formed a level as well. We formed a level with only one touch, and we could expect the second approach to enter the trade and hoping for the price to grow, to break these levels. So there was the ideal entry here, I mean, with a very short stop.
What time frame we have to use?
You can use the time frames from 5 minutes to 30 minutes. It should contain just the structure like this. It could be more or less clear on 5 minutes, 15 minutes, half an hour, and so on. The market is fractal. It works on every time frame. So the really good point of this certain setup is that we have extremely good risk reward ratio. Look at this. For example, we have entered here the stop loss behind this structure, behind this level, and our take profit is, as you see, really good. 2% to 32% minimum. 1 to 15 risk reward ratio. That's how you should evaluate the strategy. And every strategy you should have either a good win rate or risk reward ratio. And the risk reward ratio parameter is even much more important and significant because it will make you profitable in long run. Because when you have something like this, 1-to-1, it depends, your long run success will depend on win rate, but win rate could depend on the market, on your mood, and so on. That's why the best strategy is the strategy with a really good risk reward ratio, when we have $1 loss against $15 profit. That's how it works. Okay, let's switch to the screener. That's how it looks like. DGAF.live.
Can you explain about this screener, how you use it?
Just a moment. Just a moment. I will post it here on useful materials in our Telegram channel. So how should we set up this screener? We go to the main menu. We go to, you can, frankly speaking, you can use Google Translate extension just to translate all the Russian words here. We go to screener, we go to volatility, for example, or volume, and we can set up each tab. For example, we go to the volume tab. It means that here we will see the futures with the highest volume within a selected period. The first, we set up the volume, Binance futures, and the volumes during the 24 hours starting from 70 millions. But I would probably change it to 500 millions to the infinity, to 100 billion. It doesn't matter. The matters only the lower threshold of this volume. I mean, okay, that's enough, about 500 millions. Then we go to formations. We can stipulate, is it important for us to show the formations, inclined levels, and so on. The volume, last 24 hours, refreshing every minute. Then the graph, horizontal levels, we turn on showing the horizontal levels. Indicators, I don't use indicators. So we save these instruments, save these settings, and that's enough. We see that we have only proper instruments for finding all the setups we just want to find in terms of breakup structure and so on. Let's try to find something. For example, we have with USDT. What else? Okay, let's try to watch with USDT. Here, this situation is already gone. It's lost, but I'm almost sure. For example, if it gives us another one chance to enter the position, correcting to this level, there will be already quite risky, because we have one touch, we have the second touch, we have the third touch, so we are risky to become this kind of liquidity, and the market will grab it. In this case, we will have absolutely the same situations on both sides of this structure. I mean that here we are interested to grab liquidity, and here we as well interested to grab the liquidity. The point is that we should have unequal distribution of this liquidity. When, for example, we have only one touch here or two touch here and many touches here, okay, that's clear. But when we have the same amount of touches to the both sides of this consolidation, we have equal chances to break either of them. That's why we should enter from the part where we have the lowest touches to the level, the lowest number, I mean, touches to the level, 1 or 2. And we should wait the breakout of the part of this consolidation where we have too many touches. 2, 3, 5. The higher the number of touches, the better. Okay, we get back to the screen. What instrument we selected? We selected with USDT, for example. Okay, with USDT. The strategy is really simple, really simple, but when we searching for the entry point, we should always use the table for calculation of your risks. For example, you're just found this entry point. Let me show you. For example, here we have here we have 8.7% against 16 and 3. So we calculating our entry position using 8.7. We calculated that our stop in dollars will be $15 per one trade. Again, I totally forgot. It's about 8.7. And our
this strategy, stop loss is broader.
Yeah, but you calculate by the same principle. Your entry position will be $172. So you enter with $172, and in case of the stop loss, it will be minus 15. In case of success, it will be about, let's calculate, about $32 profit as an example. Okay,
1-to-1 risk ratio.
1 to 2, I would say. Yes, that's not the highest one, but we can expect these targets. It will be much higher, 4 times higher. So okay, let's watch the WIF USDT. What could we say here? First of all, we should be sure that the instrument is very active, that the participants were pumping it for a long period. Then we see that here we have a kind of consolidation, not such a down trading structure, but a kind of consolidation. But anyway, I see no entry points. Why? Because we have too many touches by both parts of this consolidation. We can't enter here because too many touches. We can't enter here because cascade levels. So finally here we sort out this structure. Why? Because too many touches by both sides. If we enter here, we are risky to be a victim of liquidity grab, and the same story here. So this situation is 50-50. That's why we are sorting out this case. Okay, let's watch IOUSDT. That's much more interesting. Let's watch. As you see, the instrument just has been listed. That's interesting. We go to 15 minutes. And what do we see here? The structure is really good. Daily volume is not. We still have no parameter for this. Yes, because the
triangle maybe.
Yeah, the triangle. The kind of structure, we have the structure, but we go to 5 minutes time frame. where we have the cascade levels. Frankly speaking, we have quite narrow structure. First of all, what I don't like, we have a very narrow structure, even if we try to enter from this point, for example. But anyway, let's watch. Why not? Let's just wait, because in this case we will be able to try something like this, but it's not the ideal structure to participate. Okay, here we have an inclined level. Here we have an inclined level. To break it, here we have only one touch. When we comes here and there is rebound, the first rebound, we enter the position. This will be our stop loss. There will be our take profit. But I don't like the only one thing. The instrument is very new, and we see no volumes. We don't know how this instrument is moving, but the structure is good. The structure is good for continuation of this movement. Let's just watch. Let's just watch.
Why you enter there?
Here?
Yeah.
Because we should find the place where we formed a level. Here we formed a level because here there was a one touch. Maybe when we comes here, there will be the second touch. And when we will see the first growing candle, there will be the entry point, because there will be the closest level from where there is a reasonable entry point to try, because this is the closest level, and we can't just break it from the second touch. Usually we have one touch, second touch. Okay, if we failed to break it, and on the third touch we break. That's why second touch we can use as an entry point towards the movement where we already have too many touches, and where the level looks really breakable and attractive. Got it? I hope it's clear.
I thought we have to have some structure.
Here on not USDT, the structure is getting down. Maybe if we have something like this, I will show you. For example, let's imagine that we are having something like this. We has grown. The volumes are getting more and more volumes. There was active growth. Now there is a correction, fixations, and so on. If we break this structure, we are getting here. So what do we see? We see the level. The first touch, the second touch, the third touch, then here as well we have a level. small level. Then we are getting back to retest it, and there will be our entry point. This is our stop loss, and this is our potential. But the problem, yes, but the problem is that the closest aims will be this kind of level, but the ratio will be almost 1 to 1. Not good. If, for example, we have something like this with many touch here, these aims will be much more attractive, but we have no attractive aims here. Only break of this inclined level and then nothing. Nothing formed. Nothing formed. Okay, let's go further. We should have too many touches or too many levels to break.
Can we combine this strategy with zones?
Sometimes it coincides with zones, but I don't like to combine strategies because each strategy contains and implies its own rules and principles. That's why these principles could be overlapped inside your trade. That's why we should divide and distinguish the strategies. Okay.
Yes.
Not USDT. I think that's all about the strategy. There is a simple approach because we have always clear structure, we have always clear risks. We as well have clear calculation of your position. It will minimize the chances for tilt. And I'm sure that if you, for example, lost the really big part of your deposit, this strategy is a really good way to restore it. It's a kind of positional trading and really comfortable. Okay, we still have nothing to consider today, but anyway, let me once again show you the model of the structure. We select the instrument according to the daily volumes, the top in play instruments. There should be something like this. Then we have a correction. So we, for example, made several touches to the level. Let's imagine there is a really good level, several touches to it. So we get lower and lower. Each maximum is getting lower, but one time we break this structure. Yes, we break this structure. For example, making something like this. And here will be our entry point. Entry point, what do we see? We see very clear risks. Here will be our entry point. Here will be our stop loss. Here we have only one touch, nothing terrifying. We are supported by this level. We are getting into the trade after the retest towards the level where we have too many touches. 1, 2, 3, 4. It's very tasty level to break. because too many touches. And finally, we are growing.
Like people.
Yes, yes. Then we break, and maybe we keep manually managing the trade, and maybe we will get further and further. Finally, what do we have? We have really good risk-reward potential. We have one touch against too many touches to the level. We should always perceive the level with too many touches as a target, potential target, and the closest level with minimal touches as a kind of structure from where we can enter. That's how it works.
It's a very good instead of breakout.
Yeah, that's a kind of early loading to breakout.
Yeah, and it's bigger
Mm-hmm.
take profit.
Yeah, I will stop recording today. I think I will post it on YouTube. I think